Insurance rates are going up. Property and casualty coverage has a lot of rate increases pending and built up behind the scenes. So why is this happening, and what can you do to keep your rates from jumping? Here's an article from a local news station saying that there's going to be sticker shock on homeowners insurance. And it's not just homeowners, auto, commercial lines, a lot of other coverages are going to go up, anything with property and casualty. And the reason why is because there's increases in the cost that go into the underwriting of that policy. Here's an example of somebody who said their insurance company raised their homeowners policy premium $700 a year. And that's not the premium, that's how much it's going up. A lot of times the reason behind it is cost of building materials, cost of replacing homes. Insurance is based on the cost to rebuild. So think about this. We see the real estate market going through the roof, right? Houses that used to sell for $250 are now selling for $400. Well, if you're an insurance carrier, you have to factor that in to your coverages. Most insurance coverage is based on a percentage of the value of the house. Maybe it's 1%. So if you have a $300,000 house, you might have an insurance rate of $3,000 a year. If your property value goes up to $500,000, your rate could go up just because of that. According to this article, rate increases are going to go up about 12%, up to 12%. And it's not just homeowners. They're talking about auto and other property and casualty. It says prices are not cooling for homes, so prices to rebuild will stay strong. When the price to rebuild a home goes up, that's what the insurance carrier has to factor in to figure what your premium's going to be. Because if your house burns down, they have to build you one or buy you one, right? The prices for homes are 10% higher than just a year ago, so that's going to affect your insurance rates. Multiple factors come into play with the rates, and a lot of times different carriers might consider factors differently. So if you see a big rate increase, check around to other companies. If you have policies that are split up, home is one place, auto's another, umbrella somewhere else, maybe look at putting them together and have your agent, if you're working with a good agent, they know how to do this, put them together and see what it will cost. If you have a commercial lines policy or cyber liability lines policy, because you're a business owner, you might see if that carrier has personal lines that might help you with your homeowners or auto. So property insurance rates are going to go up. You're going to see it if you haven't already. Those are some ways you might want to try to mitigate it. And you can also consider changing your deductibles to cut your rate down. If you're not going to put in a claim anyways, you might as well jack the deductible up so your rate might come down a little bit.